Yo, what's up? It is Trader Tuesday. Gotta get that money. Gotta get that money. Yesterday was a small day for me. Only have 140. The only really trade that I nailed yesterday was SGE on this halt resumption. So the halt resumption was I just insta bought this, and then I got like maybe 20 or 30 cents on it. And that was the only really trade that I had. Everything else, I was small green, small red, small green, small red. Really, really tough trading, man. The past 2 weeks have been tough trading for me. Very hard to adapt. I've been kind of just going sideways. Last week was flat, a flat week. And yesterday was small green. Hopefully, we start seeing some more favorable action. I know some people are like nailing these moves, but for me, I'm definitely having trouble managing my risk to the downside. Yeah, MTC. I've been looking at MTC. For some reason, it's not on my scans. Let's take a look at the float. MTC. Let's see here. How's everyone doing? Hopefully, you guys did well yesterday. Share float 198 million shares. That is why it is not on the scan. 198 million shares. That is massive. That is massive. So we're at 309. Yeah, I mean, back here when it moved, I remember I've traded this before. There had to have been a lot of offerings, because I do not remember the float being that big. Like, we have some decent days back here. This is a decent momentum day, 160 all the way up to 4, about 4. Here, from $1 all the way up to 486. But now the float is so big, I don't know if it's going to be the one. It's got so much supply. So float 198 million. I like to look for float anywhere between anything under, let's say, 20 million. I will trade higher than that, but the price action tends to be a little bit, I would say tougher to trade, but a little bit slower. It's not as can't go as parabolic unless it has massive volume, because it needs more volume to offset that extra supply. But CMND, let's take a look at CMND. Take a look at that float on CMND. 2.92 mil. So 2.92 million shares on CMND. Let's fix the lighting in here. I don't know if that makes a difference, but all right. New Way. If you guys like those penny stocks, we got New Way bumping up here. Cheap stock. If you guys like those cheap stocks, we got New Way up in the building here. You're looking at CMND, so let's take a look here. CMND, what's the news catalyst? I think I already know the company name. I remember. I've traded this many times. Clearmind Medicine. Yeah, look at all these days. Like, all these days I probably traded this. But it doesn't look like it likes to hold highs on this one, so gotta be careful. But yeah, Clearmind Medicine shares are trading higher after the company signed an exclusive patent license agreement. I like that. Patent license agreement with Yisum Research Development Company. So patent news can be pretty decent. I've seen a lot of good moves on patent news, on a patent catalyst. Hopefully we can hold up this this range here and then go for the breakout. for the breakouts. Let's see, we are over the 180-day 200 EMA, which sometimes acts as resistance. We're below the daily, well below the daily 200 EMA, which is great. We got a decent price range. We closed yesterday above 75 cents, so we don't have to worry about tight halt bands. The spread is about 1 cent. Sometimes I do very well on 1 cent spreads because I can manage my risk. Or lately, we've been having spreads that are like crazy. Like even on like a $3 stock, we've been having spreads of 10 cents, which is absolutely insanity. So, you know, hopefully I'd like to see a stock that has a little bit of a tighter spread than what we've been seeing. So maybe this one will be a little bit favorable in that area. Let's see, if you take a look at the daily, we're going to want to clear out of these levels. So it looks like we already cleared out these first set here of topping tails. We're going to have some resistance around. Yeah, so it looks like we're already showing resistance where we topped out. Pre-market is right where we could not close above these levels. And that line that I just put there shows it perfectly on the daily chart. I mean, on the 1 minute chart, sorry. And then obviously we're gonna have, you know, we're gonna want to have to clear above these highs, 260. So maybe 210 and 230, 240, all the way up to 265. So I'm just gonna use this as reference. And after that, we have more back here. Crap, there's a lot of topping tails, man. A lot of topping tails. Do I think we're going up to 10 bucks? Probably not. I'd be surprised if we even get up to like. So these, I must have already put these here a while ago. Honestly, I'd be surprised if we can just even break through these highs around 250. Anything more than that, like if we start pushing $3 and $4, yeah, I'd be super stoked, but I am not expecting that kind of move. But who knows? Who knows? Who knows? Who knows? But yeah, so I'm looking here, you know, breaking over pre-market highs, which will start to break into areas where we previously could not close on the larger time frames. And then maybe shorts, maybe accumulated in this area, start to stop out, take their loss, break even trades, and that along with the momentum can push this up to a new high on the larger time frame, and maybe pushing up to 3. So that's kind of what I'm looking at here at CMND. You definitely want to hold these higher lows. You know, sometimes we do break below the ascending support, but then to quickly reclaim, which then shows strength and gives a little bit more conviction for the longs. So also be aware of that. But if it starts to break below the ascending support and we don't reclaim anytime soon, and we just start stair-stepping down, then that's definitely not good. Yeah, it's a little thickly traded for sure. I would say not really. I mean, yes and no. I mean, if it's thickly traded, there's a little bit more liquidity, so you could take some bigger share size and not get any slippage. But the cents per share as far as taking profit is going to be limited because it can't really skip, you know, 25 cents, 50 cents, $1 a share at a time with some of the thinner stocks. But you know, it's a little bit easier to manage your risk, I'd say, because you can get out at an area that you want to get out because there's actually liquidity, versus if it's thinly traded and there's only, you know, a few shares traded at a certain price level and you get caught in a flush, you send out that market order trying to get out, you're bottom ticking on like a 10-cent spread. But, you know, with this, it's like, you know, if it starts to flush, you know, I can still get out reasonably well as long as I don't wait, you know, and hold and hope. But sometimes with the thinner stocks, it's like before it even flushes, it's like the bid already dropped like 20 cents. And you send out a market order, of course you're going to get filled on the bid. So, I don't know. How did I do yesterday? Small green up 140 on SGE. SGE was my only winner. I think I was up 240, and then I lost 100 on TCBP. So yeah, just the halt resumption trade. I bought the halt resumption trade and got a nice, you know, 20 or 30 cents, and that got me up to like 240. And then TCBP, I was really convinced that we were going to see this breakout here from the pre-market highs. So I got in on the dip. Got in the dip, and I was like confident. I was like, I'm ready for it. And then it just capitulates. But I kept the loss tight, only $100. So finishing up 140 yesterday. Those are really the only trades that I kind of sized into. TWKS. The only problem is the volume is low right now. I do not see it on my scan. So it's likely a large float. I like CMND. If I was a longer hold time trader, I would definitely be getting in right now, looking for a bigger move. But that's just not my style. Yeah, I can see it is a little thick. I wonder though if at the open, since there's going to be a lot more volume, if it's going to be, you know, moving a little bit quicker than what we're seeing here. It should. Obviously it should, but you know, is it going to, you know, keep up the pace? Sometimes I do very well on thicker stocks, so because it's a little, because the sticker, it gives you a little bit more time to react, maybe on the level 2, as far as reading the level 2. Say if you see a big bidder, you know, it may take like a half a second or a second for the bid to get chewed up, since it's so thick, that it gives you that time, that reaction time to sell into that bidder to manage your risk. Or on the ask, like if you see the ask on a breakout getting chipped away, you know, you'll have like maybe a second or 2 seconds maybe to jump in as the ask is getting chipped away at a critical breakout level or pivot point, and that gives you that kind of reaction time to get in as it's getting chipped down. So that's also another kind of bonus on some of these thicker stocks, is it gives you that extra kind of reaction time. And on the thinner stocks, sometimes it just skips over. I've seen stocks just skip over to breakout. Like we'll like pop up over 176, and on the level 2 it says, okay, we break 176, and I'm thinking, all right, we're going to 180. I want to wait for 180 and jump in at 180, but before you know it, you know, the ask is already at like 190. The ask is like 190 and just jumps. It just skips 25 cents. And it doesn't even give you that time to get in. You had to get in off the low, or that's it. Or you're chasing it. So those are kind of like those thinner stocks that, like, sometimes you don't have that reaction time. It's like you got to get in and anticipate it. Because, you know, you won't have that time to just jump in as on some like critical breakout level. So different style of stocks, you know, favor different types of traders for sure. So we're at a critical support area. If we do break below I think at the open, you know, it's definitely possible. Well, maybe we're going to break it here, but at the open, it's definitely possible you're going to see like a washout and then a rip. That's possible. So, you know, don't be alarmed if it does break this support level. Could just be an area trapping shorts. And what we mean by trapping shorts is, okay, shorts getting in, shorts are getting in, shorts are getting in here off the highs. And then what they're looking for is this move, that break of support. And that gives them more conviction, and they're adding into that. They're adding into that. But when price starts creeping up to that previous area that broke down around, let's say, 170, 175, they're now in the red, or they're break even. So what would have been a great trade for a fade, they're now break even, and they're starting to cover. And when you cover as a short, you're buying the stock. And that adds more buying, adds more demand to the long side. And that's why you see when shorts are trapped and they're stopping out, you see a fat green candle that just starts to kind of just go bananas. And in a hotter market, in a very hot market, you know, that can trigger like a 200% move. Just that one simple trap. Yeah, it's like a false breakout for longs. Yeah, it's literally the opposite. Like, let's say, okay, you're long, you're long, you're long, you're long, you're long. You know, longs are going to have their stops maybe here. And then they start to break out here. We're adding into the breakout. We break out by a second, by a cent or 2 cents. And then we reject, coming back down. All those longs are now break even on the trade. And now everyone's like, I gotta get out. I gotta get out. And so they start adding, they start selling and selling and selling, adding to the selling pressure while the shorts are starting their position because they see that false breakout. They're like, oh, this is a good entry. So I'm gonna sell. I'm gonna sell short. So that even adds more to the selling pressure, which is why you get that extended move to the downside because you have all that selling. And we see a massive capitulation. And a lot of the times we don't get a move to the upside or the downside until we trap one side of the market, because that gives it the juice, it gives it the gas to make the move. That's what fuels the move. Obviously not all the time, but you know, a lot of the time we won't move until we do see the trap, which is why you'll see this crazy wedge, this very tight wedge, and then all of a sudden you see it boom, boom, real quick on sometimes when it's a hot market. Or we see the opposite. We see up and then down. But not all the time. You know, it could just go up and break out and start to rip. You know, that's obviously, that we've seen that many times before too. But it's not so much about like seeing the actual candles. It's about the mechanics and the mindset and the psychology behind the market. Yeah, chart patterns do work, but why does it work? You know, what's the psychology behind the chart pattern? That's what's important. But very nice wedge here coming into the open. The big orders on the bid are short seller covering. Yeah, sometimes the big orders are short sellers covering, or they are longs getting in. There's no way to know for sure. Yeah, there's no way we can know for sure just by looking at the level 2, unfortunately, if it is a long or a short. But it really doesn't matter. All you need to know is that there is a big order and somebody is, you know, either trapped or going long. You know, either way, it should add some more conviction to your trade. So we got about 6 minutes. So we're starting to see a break. Well, not quite. If you want to fit in this topping tail here, we're not quite breaking out of the wedge yet. So it really depends how you look at it on this chart. If we are breaking out or not. That's why sometimes it's not exact. Some people are going to have their chart like this, and some people are going to have it like that. There's not one right and one wrong way. It's just about what are the majority of people doing, because the majority of people are going to drive the market as far as, you know, buying, where they're going to buy at, where the trader's going to buy at. So that's why we like to have VWAP as well in 90 MA, because most of the, I only have it because most traders use it. And if most people use it, then it's well respected. Similar with your chart pattern. If it's where, so now we're breaking out. So if most traders now have their line here, they're going to want to start buying here, or an entry, or the potential test of the high. Because this would be a break of a key trend, at least on the 1 minute chart. Or if they're already in off the low, they may be adding. But I don't want to get in. I mean, some people also might be waiting to the open, because my mindset right now is like, we're only 4 minutes here to the open. Why would I get in here when I could just wait for the open and potentially save me some market risk, time in the market risk, because that's also big as well. Then at the open, you know, we could see the trap. We could see the trap, or we could just do an opening surge. I'm thinking we might see the opening surge. Sometimes when it's curling up right into the opening bell, you'll see the opening surge. It's kind of like just like pressure building, and then right at 9:30, boom. Sometimes if it's, you know, coming to the downside, we'll see it to the opposite way. We'll see the opening dump, and then sometimes we'll get the reclaim. But yeah, this candle here, this doesn't make me too confident here for the opening surge, actually. If we started to like build up, like in this area, build up, right at like 180, 181, 182, I definitely want to be in for the opening surge. If it starts now, we're dumping back down to support. I think we're gonna get an opening dump, and then maybe a reclaim. That's just based on seeing the market every day and noticing different trends as far as what might happen at the opening bell. That's really all that is. I don't have any statistics to back it up. Just kind of like anecdotal experience, which may or may not be even correct. So trading is risky. I'm sure you guys know that already. All right, so we're going to be focusing here on, let's see what else we got. AIRE. Let's see what that's doing. AIRE, if we get over VWAP, I'll take a look at it. Trading higher after the company announced its completion of its previously announced acquisition. It's an acquisition news, not really my thing. Not really a good catalyst for me. All right, I like CMND. I'm going to be focusing here on CMND. Hopefully you guys get green today and capitalize on some decent momentum. Hopefully we'll see something today. If not, I'm perfectly fine with just being sideways or flat. That's completely fine for me. I'm not going to be fighting it. I'm not going to be fighting a losing battle. I'm not going to be fighting into a max loss day. So that's kind of my plan moving forward. But I'd be happy to capture something nice today. So good luck, and I'll catch you guys later.